The decision to buy a home or to rent one is a pivotal point in everyone's life. It's a choice that has far-reaching implications for your finances, lifestyle, and overall well-being. While there's no one-size-fits-all answer to this dilemma, it's essential to evaluate your unique circumstances before making the decision. So today I'll take you to 7 shocking reasons why you should stick to renting. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Number 1. The housing market. The ebb and flow of the housing market isn't just a topic for economists. It's a crucial consideration for anyone pondering the buy versus rent dilemma. Imagine the housing market as a vast ocean, with waves of economic factors shaping its ever-changing landscape. Whether you're diving into homeownership or sticking into renting, understanding these market dynamics can make all the difference. Deciding when to buy a home isn't just about finding the perfect property. It's about timing the market just right. Picture this. When the economy is booming, the real estate prices are riding high. Purchasing a home might seem like a lucrative venture, but hold your horses. If prices have hit their zenith, diving in could mean you're paying top dollar for a property that might not appreciate as expected. In such scenarios, renting might just be the savvy move. Market cycles are just like the tides. They are inevitable. So when the housing market faces a shortage of available homes, prices naturally surge, creating a frenzy among buyers. It's like a real estate rodeo, with everyone scrambling to snag their dream home before it's gone. But here's the secret. Just resist the temptation to get swept away in the whirlwind. Patience pays off in this game. So take your time, weigh your options, and find a property that not only meets your needs, but also aligns with your long-term financial goals. Number 2. Credit score considerations. The elusive credit score, a numerical representation of your financial trustworthiness. When it comes to securing a mortgage, your credit score isn't just a number. It's your golden ticket to favorable terms and affordable homeownership. Picture this. You're eyeing that dream home, but there's a catch. You need a mortgage. Enter your credit score gatekeeper. Most private lenders won't even entertain the idea of lending you money unless your credit score meets their standards. Think 620 is the magic number. And here's the kicker. The higher your score is, the sweeter the deal. A stellar credit score can land you lower interest rates, translating to big savings over the life of your mortgage. But wait, there's more. When it comes to down payments, conventional mortgages have their own set of rules. Imagine a scenario where you're ready to take the plunge, but you need to pony up at least 5% of the purchase price. Struggling to meet that threshold? Well, brace yourself for private mortgage insurance if your down payment falls short of 20%. It's like an extra cost slapped onto your mortgage, adding to your monthly expenses. So what's the game plan? Well, there's proactive credit management. Take charge of your credit score by paying bills on time, keeping credit card balances in check, and resolving any outstanding issues. Think of it as priming your financial engine for the journey ahead. Smooth sailing into the realm of homeownership. Number 3. Managing debt and mortgage readiness. Let's delve into the realm of financial health. When contemplating the monumental decision of buying versus renting, your debt situation emerges as a crucial consideration. You may find yourself juggling hefty debts like a circus performer. Student loans, credit card bills, maybe even a car loan. Now ask yourself, is now the right time to dive headfirst into a mortgage? Here's the reality check. If you're barely keeping your head above water with your current debts, adding a mortgage into the mix feels like sinking in quicksand. Think about it. If your paycheck disappears into a black hole of bills every month, can you really afford to add a mortgage payment into the mix? It's like piling bricks onto a sinking ship. Eventually, something's gonna give. Lenders, the gatekeepers of mortgages, peek into your financial closet and check out your debt-to-income ratio. They're looking for a balance, like a seesaw on level ground. Ideally, they want to see your debt payments gobbling up no more than 43% of your income. But if your debts already have a stranglehold on your paycheck, adding a mortgage payment could tip the scales into financial peril. It's like walking a tightrope with weights strapped into your ankles. It's not a great recipe for success. Number 4. Future relocation considerations. Let me ask you a question. Are you a free spirit, ready to chase opportunities wherever they may lead? Well, in that case, the permanence of homeownership might feel like a ball and chain to you. Renting, on the other hand, offers the freedom to spread your wings without being tied down. You sign a lease, settle in for a year, and if adventure comes knocking, you can pack your bags and hit the road without looking back. It's like having a ticket to ride, but with no strings attached. But hold on, what if you do decide to put down your roots in a new city? Before you take the plunge into homeownership, tread carefully. Buying a home isn't just a financial commitment, it's an emotional one too. It takes time to recoup the cost of buying a house, from closing fees to settling in. If you're forced to sell up and ship out shortly after moving, you could find yourself swimming in a sea of red ink. So before you make that snap decision, take a deep breath. Give yourself the time to settle into your new surroundings, gauge the job market, and weigh your options carefully. By doing so, you'll set sail on the homeownership journey with confidence, knowing you've charted a course that aligns with your present and future aspirations. By the way, if you're enjoying this video, please take a moment to like and subscribe. It really helps us spread the ThriveWise love so we can help more people thrive wisely. And going back, number 5. Insufficient down payments. Let's talk cold hard cash. Buying a home often demands a hefty upfront investment. So before you set sail on your home buying journey, here's a crucial checkpoint. Do you have enough savings to make a substantial down payment? Experts typically set the bar at a minimum of 20% down payments to avoid the dreaded extra expense of private mortgage insurance, or PMIs. But wait, there's actually more. Building a healthy cash reserve to weather unexpected expenses during the home buying process is just as vital. Think of it as your financial safety net, a buffer against the stormy seas of homeownership. Consulting with a seasoned real estate agent or lender can shed light on your affordability and down payment requirements. If your savings fall short of these benchmarks, it might be wise to pump the brakes on the home buying train until your financial ship is on steadier waters, or consider renting as a more feasible short-term solution. Number 6. Commute considerations. The daily grind of commuting, often overlooked but also important. Your dream home fits snugly within your budget. But here's the catch. It's nestled far from your workplace. In such scenarios, renting might just be your knight in shining armor. Why? Because commuting, especially in car-dependent areas, can pack a punch on your wallet, as well as your well-being. Long commutes aren't just a drain on your time. They're a drain on your health and your relationships. Studies have linked lengthy commutes to increased stress levels, physical ailments, and strained personal connections. And let's not forget the financial toll. Fuel, maintenance, jacked up insurance premiums, and the looming specter of replacing your vehicle sooner than planned. It's a cost-benefit analysis that goes beyond dollars and cents. So before you sign on the dotted line for that distant dream home, pause for a moment of reflection. Consider the toll, both financial and personal, that a lengthy commute could give you. Is the allure of homeownership worth the added expenses and potential health risks? It's a question that deserves careful consideration as you navigate the path to finding your ideal abode. Number 7. Short-term resident. One of the foremost factors to consider when deciding between renting and buying is the length of your intended stay. Purchasing a home is a long-term commitment, typically requiring at least 5 years to recoup the initial investment and to build equity. If you anticipate relocating within a shorter time frame, Perhaps due to work opportunities or personal preferences, renting may be a more suitable option. The financial implications of selling a house sooner than later can be substantial. Realtor commissions, transfer and capital gains taxes, as well as moving expenses and the costs associated with preparing the house for sale can significantly erode any potential profits. Therefore, it's vital to align your housing decision with your anticipated duration of stay, keeping in mind that renting offers the flexibility to adapt to changing circumstances. Well, that's basically 7 shocking reasons why you should stick to renting. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.